As traders, we face many obstacles on a daily basis. These obstacles can include things like making sure we're staying true to our process, making sure that our analysis is on par, making sure we're sticking to proper risk and money management, making sure we're generating high probability trade ideas, and making sure we're navigating all of the unscheduled news correctly. The point is that traders have many obstacles that they face in the trading gauntlet every day. But there is one particular culprit that many are not even aware of, and this culprit is boredom. I mean, it's literally in the title of the video, so if that came as a surprise to you, then trading is the last thing that you should be worried about. Anyway, back to boredom for a second. Boredom is a problem for traders, and one that doesn't often get the attention that I think it deserves. As a strategist here on our analyst desk at Financial Source, I get to hear all the challenges that traders face on a daily basis. And I've seen it time and time again how boredom has creeped in without traders even realizing it. With this boredom, causing them to look for low conviction, low probability trade ideas just to make sure that they're staying busy. You see, the problem lies with the way that our society usually operates. We've been preconditioned to believe that the more we do, the more productive we'll be and the more money we'll be able to make. For example, let's say you're a doctor. You need to try and squeeze in as many patients as you can into one particular session. Or let's say you're a lawyer. You need to try and get through as many client issues as possible in as short a time as possible. If you're a bookkeeper, the more books you do, the more productive you are being. So in most professions out there, the more you do, the more productive you are, and the more income you could be earning. However, oftentimes in trading, it can be the exact opposite. Sometimes traders can make more money by not doing anything or just staying patient and out of the markets. In trading, very often the right trade is simply not to trade at all. You see, in some market conditions, it's really best to just stay flat and wait on the sidelines. For example, during market environments where there's thinner liquidity and lower volumes, like bank holidays, it can give us one of two types of trading conditions. It'll either give us very slow and muted moving markets, but given that thinner liquidity, it can also mean very erratic price behavior if major news hits the wires. Or maybe it's a very tricky macro fundamental trading environment where there's a lot of things pulling prices back and forth, lots of conflicting drivers just causing choppy price action across major asset classes. In those conditions, it can be a good idea just to stay patient and rather wait for those really clear no-brainer catalysts before you commit to any trades. Or maybe the market is just in that typical pre-event limbo when markets are waiting for key news or data to come out and markets are simply unwilling to commit until they get that out of the way. Those days can be tricky to trade because it's difficult to trust the price action, unless of course there's a really good reason for some strong pre-positioning going into that event. Now, what if trading conditions are so bad that it means that you can't take a trade for a whole session, or maybe a few days? Or what if it's a whole week, or maybe even more? Can you really go a whole week without placing a single trade and still consider yourself as a productive trader? Yes, you can. And don't you let anybody else tell you otherwise. You see, there are some traders out there who claim they always need to be in the markets. Even if it's a small position they're trading, they always, need to have a position on. Almost like having a position in the markets is, it's an ego thing for them. In my opinion, that's just silly. If you allow your ego to make your trading decisions, it's going to hurt your account in the long run. It's just not a very smart way of going about it, I'm afraid. Now, those who say they always need to have something running have probably never traded in a bear market before. You see, cyclical bear markets, much like the one that we're in right now in 2022, usually sees the big players reduce their exposures to various asset classes and raise a lot of cash. Why would the best of the best of the best in the industry sit on a ton of cash during these environments? Why would fund managers and portfolio managers move their portfolios into overweight cash positions waiting on the sidelines? If the best in the industry move to the sidelines in bad market conditions, shouldn't we learn from their example? Maybe it's possible that those who teach you to always have something running might have an agenda. For example, if the trading guru telling you to always have a position running is subsidized or sponsored by a broker, then their motives might be compromised. Or if the person teaching you that says always have a position running, if they sell a subscription service, then their motives might be compromised, right? I'm proud to say that here at Financial Source, we just don't do that. We don't have a hidden agenda like that, which means that we tell it like it is every day to our subscribers. If there are good reasons to stay patient, we just stay patient, and it's really as simple as that. So please don't take the decision by some who always have positions running, as a sign of bravery or trading mastery or whatever. There are times when it's best to have no position running at all. Now, believe me when I say I know that is easier said than done. Some days volumes are so low and liquidity is so thin that watching the markets is almost like watching paint dry. It can be painstakingly boring sometimes, I know. But it's exactly on days like that where boredom strikes and gets the best of us. It's on days or weeks like those where we start looking for trades instead of allowing the trades to come to us. You see, when you need to go out and find a trade to satisfy your boredom, that finding often just ends up in us jumping into low probability and low conviction trades. I've seen it time and time again, and I myself was guilty of that a very long time ago. The boredom, when we allow it to take control of us, will force us into many unnecessary trades, which will, of course, in the long run, just end up with lots of unnecessary losses. You see, most retail traders underestimate the usefulness of not having any position running. Apart from helping us to avoid unnecessary losses by avoiding trades that we shouldn't have been taking, it also helps us with our psychology. When we are holding positions, we tend to be biased to any incoming news, data, and information that goes against our trades. Now, don't get me wrong, this isn't a sign of a weak mind or anything like that. We all struggle with those biases. But that's the beauty of not having any position running in the markets. It gives us that freedom to interpret any incoming news and data and information without any bias. Now, staying patient can be especially painful when there's big moves in the markets, right? That's where FOMO kicks in and it just rips your boredom into overdrive. Yes, it's not nice seeing the markets move without you. But if you're not in the right trade for the right reasons at the right time, then just relax and don't chase the markets. Have the discipline to know that you don't have to make money on every single tick that the markets move. You just need to trade the right trades at the right time for the right reasons by using a trading process that fits your personality and your style. So don't allow boredom to eat away at your profits. Make sure that you conquer that one. Happy trading.